Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is December 7th, and let's get started with charts. Bonds are trading pretty well today, actually. There wasn't a lot of news to really make them trade this way, but hey, I guess you don't look a gift horse in the mouth. But we should be skeptical. So we're currently trading at 102.94. That actually exceeded my expectations. And current support is coming down below us. If you look at my mouse, 102.80 and down at about 102.50. You can see this is a pretty good floor right here at 102.50, 102.45. As far as resistance, that's coming up above us. We're back in battling 103 again, guys. So resistance up right in front of us at 103 and again at about 103.20. So Jobless came out, really was right at expectations. So wasn't really a big market mover. So I'm kind of surprised that we're this far in the green today. So here's the scoop. News coming up, this is where the real big shakers are going to be. Number one, we got labor stats that's coming out tomorrow. I think that's going to shake up the market, and we could see a little bit of a sell-off on the short term. But we also have the Fed coming out next Wednesday. It's anticipated that they're going to increase the short-term rate by about 25 basis points or 1/4%. And so the market's kind of ready for that. If for some reason they don't, then we actually could see some selling off on our bond market. And I know you're thinking, well, Scott, if the Fed's increasing the short-term rate, or they're anticipated to, wouldn't rates go up? And if they didn't, wouldn't that be a good thing? Well, not necessarily, because the short-term rate impacts short-term rates, like your short-term debt, like your credit cards, things like that, not long-term debt, like 30-year fixed mortgages. So when the Fed actually increases the short-term rate, it can actually help bonds a little bit, believe it or not. So because it's an inflation fighter, it slows down the economy. And remember, bonds go almost the opposite of the economy. So when the economy's doing really well, stocks are generally doing well, but bonds, not so much, and vice versa. So we'll see what comes out next Wednesday, but it is anticipated that the Fed's are going to increase the short-term rate. Hopefully we'll see a little bit of good news on the bond market. And if things go well, we might be able to break 103. We'll see. But the analysts are all over the board, guys. Anyway, to kind of quantify where we're at right now, Freddie Mac reported the average consumer got a 3.92 rate, paid half a point. You can see it down here for yourself. And that's when bonds were trading about 102.80. If you look at my mouse, 102.80 here. Now bonds are trading a little bit higher, not much, 14 cents. And so if we take half a point, reduce it by 14 cents, that's 36 cents. So the average consumer might be able to get something around 3.92, somewhere around 0.36. So Freddie Mac, there you go. Let's get to the forecast. So my last projection was a miss. I did not think bonds would exceed 102.80. And here we are at 102.94. So hey, I hate being wrong, but you know what? I like when I'm wrong, and I'm on a conservative note. As far as projections, analysts are all over the board, guys. Two of the three analysts that I follow are actually going pretty bearish on short term, which I think is kind of fair. And they're going actually bearish on long term as well, where one of the analysts I follow is actually bullish on long term. He really thinks that the Fed increase could actually help rates, and I got to jump on that bandwagon. So here's where we're at. I think we're going to probably see bonds range between about 102.80 and 103.10. That's only a 30-cent range that I'm going to be focusing on. And that leaves us room for a drop of 14 cents or room for a gain of 16 cents. So what do? Well, if you're in a position to lock right now and you don't want to really go through this roller coaster that we're probably going to see in the next week, I would say, you know what, throw in the towel, consider locking in, because we are actually at a pretty good range today. If you do want to kind of see what happens, it will be exciting, but there's going to be some ups and downs. I really think there will be. And so I would say float, just be really careful, ahead of the Fed. If we see a sell-off tomorrow, that's going to be kind of expected. And so, but if you can hang in there for a week, you could see some pretty good returns. So, but hey, nobody has a crystal ball, guys, but that's the news. Anyway, we'd love to hear from you. Leave your comments down below. Hit that like button, and if you'd like to subscribe, click the guy on the top left. And if none of this made sense to you, it's okay. At the top right is Mortgage Bonds 101, and that will teach you the basics about how bond trading impacts you as a consumer. trying to get a mortgage. Anyway, that's it for now this week, and we'll see you next week. Take care. Bye-bye.